Our next guest believes that higher rates make it, quote, tough to argue for multiple expansion, and that is a key driver for names like Apple. Let's bring in Barton Crockett, Rosenblatt securities analyst. He downgraded Apple to a hold recently with a target of 198. Barton, it's great to have you. Do you think the relationship to rates, between rates and Apple is the most important name in evaluating the stock?
Well, I think it's certainly important because, what you have with some other tech stocks that we favor is meaningful growth. You have margin improvement at Amazon, margin improvement at Meta, and great top line. At Apple, you don't have that level of kind of reset to the margins, and you don't have that level of kind of top line. The stock has been a great performer, and that's been really propelled by valuation, which now at close to recently close to a 30 PE, about 1.5 times the S&P 500 is at peak absolute and relative levels. I think that's been a great driver. It's hard to say that you want to bank on more of that from here.
All right. We were looking at the chart, the 2-year chart earlier this morning, and wondering whether or not these levels around 170, 180 are support, whereas they were resistance in late 22.
They could be. I'm not going to go too far into the technicals because I focus more on the fundamentals. But and I'm not negative on Apple. I've got a neutral rating at this point. But I think you've got to be careful. Without kind of the great kind of earnings revenue reset that we see at some other companies, and with inflation rising, which I think, or with interest rates higher, which I think is a headwind for the multiple, it's hard to say that this stock is going to be an outperformer like it has been going forward.
Barton, where else do you think, you mentioned a couple of other names that you think have growth. Are you seeing enough differentiation in terms of, investors, kind of migrating toward the growth stories? We were, used for a little while to people considering this 7 or 8 stocks as a block.
Yeah. Look, I do think that there's separation in the tech group broadly. So I think you have a group of companies that are benefiting from, basically a reset of costs that got way out of whack into the pandemic. And we're seeing that really kind of propel margins forward, that people like Amazon, people like Meta, people like Pinterest. And we've recently kind of moved in to more constructive ratings on Amazon and on Pinterest. So we like that story. We do think that the macro is healthy enough that we're supporting a good ad market, particularly those on the secularly, favored side of the divide, the more kind of internet stories. And we're also seeing a consumer that can spend, which is helpful for certainly retail at Amazon, and helpful, I think, for cloud services, which are also getting, over time, I think, a benefit from AI. So there are opportunities, there's growth stories, there's margin stories. We favor those versus just banking on multiple reset, which has been the story at Apple.
Do you think of Apple as a high multiple tech stock that sells off during, times when yields are going up, like we've seen, or is it more a consumer staple bond-like to own during tough times? Or maybe they both go together. But how do you think about the right multiple and what kind of environment works best for Apple?
Look, I'm not saying that Apple's multiple retrenches. I think it's appropriate for them to be valued like a premium, consumer products company that people will buy these devices when times are tough. And I just don't have the call today that we're facing tough times. The macro has been more healthy than I expected, into this year. And today continues to be more healthy. If we were to go into an environment where the macro is less healthy and growth is harder to come by, maybe you cling tighter to those names that are just kind of comfort food, like an Apple. But today we don't see that. Today we see margin and growth opportunities that are more interesting in the space.
We should talk about those another time, Barton. Really good stuff.
Yeah.
Appreciate it on this Friday. See you soon.